February 2026 has delivered one of the most explosive chapters in silver market history. While your competitor talks about gold crossing $5,000, the real story that's shaking American investors is happening in silver, a metal that skyrocketed to an unprecedented $121 per ounce in January, then crashed by over 35% in just 48 hours. This isn't just market volatility. This is a fundamental shift that every American investor needs to understand right now. Let's start with the numbers that have investors across America talking. Silver has delivered an astounding 138% return over the past 12 months, nearly doubling your money if you got in at the right time. To put this in perspective, silver touched $121 per ounce in late January 2026, levels that precious metals analysts called unprecedented and almost unthinkable just a year ago. What drove this meteoric rise? Three critical factors converged to create the perfect storm. First, the physical silver market has been in deficit for 6 consecutive years since 2021. That means global demand has exceeded supply by 100 to 250 million ounces annually, a massive shortfall in a market where total mine production is only around 850 million ounces per year. Second, industrial demand, particularly from the solar panel industry, has exploded. Silver consumption in solar applications alone surged from 80 million ounces in 2016 to over 200 million ounces today. Add to that the artificial intelligence boom and electric vehicle expansion, and you're looking at a metal that's become absolutely critical to America's technology. But then came February 13th, 2026, a day that will be remembered in precious metals history. Silver prices collapsed from $85 per ounce to $74 per ounce in a matter of hours. What happened? Bloomberg reported that Russia had presented an economic package to the Trump administration, offering to return to the US dollar settlement system as part of broader negotiations over Ukraine. The proposal included collaboration on fossil fuel production, joint ventures in natural gas, and partnerships in oil and critical minerals. While neither the Kremlin nor Washington officially confirmed these proposals, the mere suggestion was enough to trigger massive profit-taking and liquidation of long positions. Here's why this matters so much to American investors. The silver rally had been partially fueled by the debasement trade, investors fleeing traditional currencies for hard assets. News that Russia might pivot back to the dollar. Understanding silver supply dynamics is crucial for American investors. Unlike gold, only about 30% of silver comes from primary silver mines. The majority is mined as a byproduct of copper, lead, zinc, and gold operations. This makes silver supply relatively inelastic, meaning even at these elevated prices, we won't see a massive surge in production. The London silver market, which serves as the physical hub for global trading, experienced severe tightness in late 2025 and early 2026. Concerns about potential U.S. tariffs under Section 232 critical minerals investigations prompted massive movements of physical metal from London to New York's COMEX futures market. This drained London's above-ground inventories, which had been buffering those annual deficits for years. According to the Silver Institute's latest 2026 outlook released on February 10th, global silver supply is forecast to reach a decade high of 1.05 billion ounces, with mine production increasing by just 1% to 820 million ounces. But here's the kicker. Demand is expected to remain largely. Here's where the story gets complicated for long-term silver bulls. The price rally that excited investors is now threatening one of silver's biggest demand drivers, the solar industry. Historically, silver accounted for less than 5% of solar panel costs, often closer to 1.5%. But with silver prices surging above $80 per ounce, that percentage has exploded beyond 30%. This isn't sustainable. Major solar panel manufacturers in China. For American retail investors, the outlook is nuanced. Physical investment demand is forecast to surge 20% in 2026 to a 3-year high of 226 million ounces, according to the Silver Institute. Western physical investment, which declined for 3 consecutive years, is expected to recover as silver's exceptional price performance and ongoing macroeconomic uncertainty rekindle investor interest. Bank of America has issued a stunning long-term forecast of $309 per ounce for silver, while J.P. Morgan maintains a more conservative year-end 2026 target of around $81 per ounce, roughly where we're trading now after the recent correction. Some analysts, including Gold Silver's lead analyst Alan Hibbard, Expect silver to trade above 100. Several wildcards could dramatically impact silver prices in the coming months. First, tariffs remain a huge unknown. While the initial Section 232 report didn't impose tariffs on silver imports, the Trump administration left that option open. If tariffs are implemented during the 180-day bilateral negotiation period, we could see another surge in physical demand and price volatility. Second, central bank behavior matters immensely. Unlike gold, which has enjoyed massive and consistent buying, so what's the bottom line for American investors in February 2026? Silver remains one of the most volatile assets you can own, as the last month has spectacular and is subject to change. Silver and precious metals investing involves substantial risk, including the potential for significant loss of principal. Prices can be extremely volatile, as demonstrated by recent market events. Past performance, including the 138% returns mentioned, is not indicative of future results. Before making any investment decisions, please consult